He was better off looking at other options. But the problem was he was 2 years into this contract. Hey, welcome to the Guaranteed Retirement Guy Show. My name's John Stevenson, and I want to talk to you about a replacement that I just took care of and how we did it with a 10% premium bonus. So a lot of times premium bonuses will get a lot of flack because they aren't what they seem, okay? Because a lot of times we'll get these bonuses and we're thinking we're making all this money and we don't realize that we're going to have our returns throttled or reduced for the next 10 years if that's the surrender charge period. So whenever you get something, the insurance company takes something back. But in this case, this was perfect. And in a lot of replacements, a lot of times you have to use a premium bonus to make it happen. So let's talk about it. So this guy, he had an annuity. It was worth around $325,000, okay? So a decent chunk of change, but he's only had it for 2 years, okay? And he got it thinking he was gonna get some decent income, but he didn't realize what it was. He knew it was a variable annuity contract, but he also knew that he wanted income later on. And so a lot of these income projections were based off of hypothetical returns. So it wasn't a bad annuity. It was with New York Life, and New York Life is known to have some pretty decent variable annuity products. But when we actually reached out to them to get a guaranteed income, we wanted to compare straight across, from what he would get from them versus what he would get somewhere else, because I don't like to replace any policies unless it is overwhelmingly good for the client, okay? So they sent us back something I thought was interesting. They actually sent us back a guaranteed annual income of $1,800 per year. So I looked at that, I was like, that can't be right. That had to be a typo. But I was assuming they meant monthly. So even monthly though, we're looking like $20,000 a year. So it's not too bad, but it's not too great either, because other annuities were paying a lot more, like $25,000 per year. Okay, so he was better off looking at other options. But the problem was he was 2 years into this contract. And so because of that, he had surrender charges of around $24,000. So pretty steep. And so with that, we had to look for a product that would give him a bonus that would make him whole. Okay, so I want to say his surrender charges were around 7%. And so what would happen is he could bring over around $301,000, $302,000 after everything was said and done, okay? The issue, of course, is you have to be made whole. You can't just replace your policy and put it with another company and get more income and swallow all those surrender charges. Like, the annuity company won't take it, okay? So what we did, and we did this with American Equity, and it was with their Income Shield 10, and that gives you a 10% premium bonus. So what happened was his account is now $331,000. So it's actually going to be worth more than it was when he started out. I'll just tell you, American Equity, they were not the highest paying one, but they were like the second or the third from the top. They were really, really close. And they were the only ones close to the top that actually would give that bonus. And so basically what he got is he got a bonus worth over $30,000 to cover the surrender charges of around $24,000. So pretty good. And his income was a lot higher. So he got higher income, he got a higher account balance. It was overall good for him. And so he was looking for highest income. That was his goal. And he knew he wanted the guaranteed pension. Okay, that was what is important to him. And so because of that, because we weren't looking for growth, because if you're looking for growth, you probably don't want to surrender your policy and take that huge hit, right? Unless you go into a growth policy that gives you a bonus. But at the same time, if you do that, they're going to throttle your future gains. So you have to think about that. There's just a lot of things to consider before just replacing your annuity contract. And so when I do look at replacements, first, if they're looking for income, it has to be significantly higher, okay? Second, it has to have a bonus that will make them whole, or at least very, very close to it. So I would rather make them whole or even a little bit above it. I'd like to make it so they're actually a little bit better off than they were with the old contract, okay? So that's basically what we did. And so if you're thinking about maybe replacing a policy, you have to think about that. If you have surrender charges, book a call with me, okay? We'll talk about the different annuity options out there, and rates are really, really good right now. So if you're looking for high income and you're thinking about replacing your policy, it might be a good choice. So rule of thumb is you want to make sure that you are in an annuity contract right now, like one that you purchased earlier, for at least 2 years, because most companies will not take the replacement unless you wait 24 months. Okay, so if you haven't waited 24 months, just wait. Do that and then book a call with me, and we can look at all of the top options, and I'll show you all of the annuities available. If you're looking for highest income, we'll look at all of them, and if you need a bonus, we'll look at the highest income annuity with the premium bonus. Okay, I'm not going to hold anything back. So I just wanted to share that story because I am getting a lot of replacement requests right now because rates are so good, especially compared to where they were even 2 years ago, 3 years ago. And so it does make sense a lot of times to take advantage of the rates where they are right now, especially if you can get back the money you lost to surrender charges and still have higher income. Usually it makes a lot of sense. So it just depends on what your goals are. So anyways, I'd love to chat with you if you are looking to purchase an annuity. So there is a link below this video. It goes directly to my calendar, and we can talk about all of your annuity questions. And of course, if you're looking to purchase an annuity, I'd love to help you with it. So anyways, I hope you enjoyed this video. If you do, please like, please subscribe, please share. And if you have questions, make sure you comment down below and I'll be sure to answer them. So thanks again for watching, and we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.